Hi, welcome to the Market Alert for Friday the 19th of February 2016. And starting off in yesterday's pre-market session, again we see the market being moved to the upside, then we get into the quiet session before the market kicks off in the main part there. See the market moving down, finding support at 16,450 before reversing and moving higher. This signal here wasn't on the real-time chart yesterday. I've recorded all of the moves yesterday and this one isn't actually shown, but what it does show is an indecision, just for clarification, that because it's loaded historically, the software doesn't know whether the entry or the stop was hit first. But we didn't actually get a signal there yesterday, and I'll just show you that in the recorded one here, just so, again, just for clarification. Let me just bring this over. Just rewind the video. Something that I do most days is just record so I can make sure that we've got the signals in the right place. So there you can see we had a potential buy, the market went sideways, and then we have the short. So this one wasn't actually indicated there. While we're here, we'll just carry on for a minute or two through here. We then get another short signal which is filled. This one is a maximum of around 15 points because we had the crude oil figures being released, which is now a high impact news item. It's become very important for the market at the moment because Bloomberg and the mainstream are saying that the stock prices are rising because of the bounce in oil. Utter nonsense, but that's what they're saying at the moment. So again, this economic news item has been upgraded from a medium impact. It was not even in the equation a few months ago. Nobody took any notice. Now it's a high impact news item, so it's a good idea to stand aside. So at this point you can see there's 16 points profit, just in case the figures are better than expected. They actually came out worse, and there you see the market moving sharply lower before moving back. And then we've got the quiet part of the session, and that's why I was using the historical chart as opposed to the recorded version, is because yours truly was busy yesterday afternoon and forgot to show the quiet time for the market. So for those of you that did trade it, that's why I'm using this. You can see there we had a 20-point loss in this trade, and then the market went on to give back the 20 points. And then we've got the usual 3 p.m. New York time ramp, well, probably just a bit earlier actually, and we see the market there moving higher. See prices moving up, and then of course because we've driven through the 20-point scalp that we've driven through, you can then move the stop up and you can see it comes back down to the 16,450 level. So a nice profit on this one. Of course the trade's still in progress when this other signal appeared here. And then at what we got, 2010, I didn't do this trade. I had enough by then, and that one also going down to make 20 points as well. But it's an interesting one because if you look at the daily charts, the market's currently struggling with the 16,500 level. Had a look at it yesterday in the pre-market session, and now a reverse. Let me just remove this one so we get a bit of a clearer picture. The market needs to take this out if it's to continue higher. We've got a bit of a sideways trading range going on now. And today's news, let's see if this can move the market through. Just got CPI at 130, so there's nothing else to move the market. We've got 1 o'clock there. We have got another FOMC member. Blimey, I'd never heard of this one. Mester speaking at 1 p.m. So they're wheeling out the non-entities as well to try and pump the market here. Retail sales from the UK as well, but that's about it on the news front. So it'll be interesting to see. CPI has been fudged for years, and currently trades around, what is it? What we got here for the CPI? Yeah, 0.1. It's shocking really, because everybody knows that the price of goods have increased, house prices and everything else, but they don't factor anything into this anymore because it's called smoke and mirrors and sleight of hand, just to give the illusion that everything is, there's no inflation around. We all know there's inflation. It's been in food prices and in also other areas of the economy for a long time, but that's how these people work now. Anything to manipulate it and give the impression that it's all under control. In the implied volatility, 1835, dropping down nicely, which is just what we want to see, ready for the next wave down. The lower the volatility goes, the better the downside move as well. So I don't mind if the market does move higher in the short term and we get the implied volatility down into those lows, because then we'll have a really good run to the downside as well. As I've said before, the froth has to come out of the options premiums in order for them to become attractive, and that's what we're seeing at the moment. That's why we got the drop off there in the implied volatility. Nothing to report much on the news front, other than that Goldman Sachs got it wrong with regards to the gold price, or their gold trade the other day. Last week they were bullish, then on Wednesday they said we short. We see the market going short, and this is a very interesting fact actually. Let me just bring up a gold chart for you. So here you go, is the article. Nothing to fear but Goldman recommendations to short gold as gold surges. So say 3 days ago they reported that they should go, or their commodities advisor said to go short gold, and then the gold price has actually moved to the upside. And again, if you just have a look a bit more clearly here, you can see yesterday big move up with the stock market. It hasn't done this since 2008, which is starting to ring alarm bells within the financial community, because again, the Federal Reserve bankers, the chairpersons, chairmen, whatever you want to call them these days, are starting to lose credibility, along with the fiat currency system as well. And this is why you're seeing this move up in gold. So every pullback in gold really is going to be a buying opportunity, and the same for silver as well. So this is why you're seeing the gold price move. Also, you can see here the Fed skeptics seek gold a safe haven as bullion bears capitulate. So again, very good article there about why gold is now starting to be seen as a bit of a safe haven. And of course, any investor should have some sort of gold or silver in their portfolio as an insurance policy, and to hedge against any sort of stock market crash and currency devaluation, etc. Right, that's it for this morning. I will see you in Monday morning's market alert. Until then, have a great weekend, and if there's anything to report during the day, I will let you know. Thanks for watching. See you in the next one.